to nail off the lender's mortgage insurance, the dirty three words. So lender's mortgage insurance is the best friend an investor will ever have. That idea is stupid. You're being a wanker. I wouldn't have been able to achieve what I have today without lender's mortgage insurance. People in the 90s had it easy. Unless I'm a fucking brain surgeon, I'm not going to earn the amount of cash that's going to get me there running a losing race. There's no chance you're going to get there.
No, the story's the same. How will kids ever get into the market? Kids will never get a foot in the door.
Give me 18% interest rates every day if a property is 3 times my annual salary. The concept of lender's mortgage insurance is really simple.
LMI came in and you can get in straight away.
The lender's mortgage insurance was the best money I ever spent. Property investing has been basically the foundation of everything. Clients have got much higher growth than this.
It's amazing.
Welcome to Brick to the Future.
Welcome back to Brick to the Future. I'm Al Lewison.
Cam McClellan.
And what we thought we'd do today is a little segment where answer the listeners' questions. And if you've got any, send them into hello@opencorp.com.au. But this week in particular, lots of questions at the moment came about entry points into the market, and specifically from people, lenders mortgage insurance.
Yeah, I think I want to nail off the lender's mortgage insurance, but I think if I introduce you, because listeners go, all right, who the fuck is Al Lewison? So Al and I have been investing for, I think we're early 20s. I'm 50 now, so that's 30 years ago now. So Al's old man grabbed us by the scruff of the neck and threw us into investment, which is really handy. Someone to trust to learn the basics. Al's gone on, the CEO of a number of different companies. We've built multiple businesses together over the years, bought and sold businesses, but property investing has been basically the foundation of everything we've done. It's given our families the life to do what we want, let us do ridiculous podcasts like this, pass on knowledge. But Al, in his success, he won't like to blow his own trumpet, but listed in the young rich list under 40s.
Several times.
Several times. So you're going up the ladder each somewhere. You didn't want me to bring that. Good. But it's been good over the last 30 years, and I think this is really important for anyone wanting to invest, is to have someone to bounce ideas off. Someone to keep you in reality check and say you're being a wanker, or that idea is stupid, risk involved in it. So I think that's what investing comes down to, is having someone to send to you and point out risk, but also to drive you and push opportunity. And that's what Al done for me.
Geez, thanks, Cam. I'm actually blushing, and now I've got to find some nice things to say about Cam, which is going to be really difficult.
There we go.
No, in reality, Cam, and everyone probably knows Cam's story more than mine. Cam's he's written his book, My 4-Year-Old, top-selling book in property in Australia, which is based around all the things that he sort of just talked about there from in the early days. We got together, we learned things together on the phone every day. Have you heard about this? Have you read that? And Cam, with his smarts, put that into a journal for his kids. And the story, it was about heading off overseas. We sort of heard about a typhoon hitting Japan and tidal waves. And Cam said, you know what, I've got this knowledge here. I need to get it down paper, and my kids, so forth, can benefit from it. Cam's currently CEO or co-CEO of OpenCorp.
CEO.
What did I say?
Co-CEO.
Co-CEO. CEO. Best-selling author. And Cam has come, as you know from his book, if you read it, come from next to nothing, and he's made something of himself through dedication and hard work. I feel dirty saying all this stuff, but here you go. It's good to be here on the podcast with you, and it's good to be able to answer our clients' questions or people's questions on things that we know.
And I reckon this is a good one, because this actually set me up. So the question of LMI, lender's mortgage insurance, that started my journey in property investing. I couldn't have got into the market, and I wouldn't have been able to achieve what I have today without lender's mortgage insurance. So I think it's really important we unpack it, because it's a dirty word. 3 words? The dirty 3 words for most people when they're going into the property market. So give us a rundown now. What is lender's mortgage insurance, first of all?
Step before that is that there's so much talk at the moment, and you probably got some knowledge on it more than I do, but lots of talk at the moment about how difficult it is for kids in particular. How will kids ever get into the market? We've spent a lot of time in our last 30 years investing together, looking at different things over the years. I think an article from 1912, article from 1960, article from 1980. How will kids get in the market? The story's the same. I think we'd pull out for people and say, here's a newspaper article from 1962, market out of reach, kids will never get a foot in the door. The world goes on and people get a foot in the door. But I think policy might change. What is it over the time that's enabled those things to change?
All right, so if we look at the property markets now, a lot of people who are probably our age or a fraction older, maybe 10 years older than us, I'm 50, remember back in the early 90s when interest rates went to 18%. And the immediate thing that the boomers, I'm not a boomer, I'm Gen X, I saw Nirvana live. So the immediate thing that the boomers say is, we had 18% interest rates. I would love 18% interest rates if the difference between my wage and the property prices were 3 times.
Yep.
Now it's 8 to 10 times. So give me 18% interest rates every day if a property is 3 times my annual salary. So people in the 90s had it easy with 18% interest rates to buy property and to pay that off compared to what the kids have got today in getting into the property market. So let's just get that out of the way to start with.
Yep.
But then we've got an issue with lender's mortgage insurance, which the concept of lender's mortgage insurance is really simple. Anything taken above an 80% loan to value ratio from the bank requires the bank to take out an insurance policy on that loan for any amount they lend over that amount. So if someone goes to 90, 95% loan to value ratio, the bank take out an interest policy for that lender, and that is lender's mortgage insurance. Insurance on the mortgage by the lender.
For the lender.
For the lender.
Lender's
Correct.
benefit.
Correct. Which obviously costs the lender, so the person taking the loan out.
Yep.
But that is lender's mortgage insurance. Now, a lot of people say, well, that's wasted money. So it's 1 to 2%, close to 2%. So $500,000 loan, $10,000 thereabouts.
Yep.
Which seems like
your maths. It's amazing.
It's amazing. Which is good because I failed tech school. But the concept of lender's mortgage insurance, it seems like wasted money. Now, if I think back to when I got into the property market in the 90s, bought my first house for $152,000, 2 doors up from one that you purchased, remember? I got $7,500 together, and I did that by saving about $3,000, sold my HQ, and that was the rest of the deposit.
Walk to work, find twigs to eat at lunchtime.
Walked to work for 9 months, rode a bike, sacrificed. So I sold my car to get deposit together, and that's the sacrifice. Yep. And I only went to a cafe when I was 25.
Yep.
Never had a smashed avo.
No. My daughter had a day of school, Gracie, your niece.
Oh dear.
Yeah, who's 10 now. And I said, day of school, and I took her to the cafe. She didn't like that cafe. And I said,
Gracie,
I'd never seen a cafe when I was 10. I didn't see it until I was 25.
Yeah, there's fish and chip shops and milk bars.
Yeah, that's right. Yeah.
So the lifestyle of kids nowadays is more if they want it now. But the reality is I wouldn't have been able to get into the property market. So having sold my car, walk, sacrifices you make, because I was delaying gratification. I wanted something great down the track. That enabled me to get into the property market. And so lender's mortgage insurance was the best money I ever spent.
So if we use your numbers, which are great, let's round them down slightly to 150,000 purchase and 153, whatever you just said it was.
Half the
Yep. So traditionally, you would need a 20% deposit, 30,000. Traditionally, you'd pay stamp duty on top of that. You need a bit more, 5%, 7,000.
Yep.
You need, what did we say there? 37. You need 40K. So you looked at it and went, I've got to get in as soon as I can. I'll sell my HQ. I'll eat twigs.
Yep.
And you're able to scrape together the deposit. LMI came in and you could get in straight away.
Yes. That property, once I'd settled on it, it actually went up around $40,000 by the time I'd signed the contract, settled on it.
Yep. Market was moving in Melbourne back in those days. Now, $40,000 at the time, I was earning, if you remember, like we both worked at Telstra together in a call center. Oh, the wage.
Yeah, our wage was $22,000 a year. So I'd made double my annual salary in 3 months by the growth of that property because I'd used lender's mortgage insurance.
Yep.
That enabled me to go, as you remember, by the time I'd settled, I just went and bought another property.
Yep.
So if I hadn't have paid lender's mortgage insurance, not only when I wouldn't have got the first property, I wouldn't have earned double my wage in 3 months, but I wouldn't have bought the second property. And then once those two went up, I bought my third and fourth property, and so on and so forth.
Let's talk about today's numbers, last 5 years, let's call it.
Oh, yeah, cool.
How that would look, and what it would mean to people if they used LMI versus waiting without using it.
So the combined capital city median house price, median is the middle sale price, not the average, in 2019 was $596,000. Now it's a 10% deposit, 59 grand. LMI, so lender's mortgage insurance, 2%, about 15,000.
Yep.
Yeah. With the total LMI plus the 15 grand, let's exclude all the other, minor legal costs and those sort of things, but about 75 grand. So the deposit required to get into the market, the amount of cost required to get into the market is about $75,000 to buy a 596,000
with LMI.
with LMI.
Yep.
As opposed to a 20% of $119,000. Yep.
Mm-hmm.
Makes sense? So if I have got $80,000, two choices. I can pay LMI back in 2019 and get into the market, or I can stop and save and try and catch up. To save my lender's mortgage insurance, I just have to save harder to get to $120,000.
So you save 15,000,
Yep.
and you keep saving and saving and saving to find another 60,000.
60,000. Right. Now let's look what happens in the market. So markets moved, and we'll go from 2019 to 2024. So the capital city combined median house price went from $596,000 to $855,000.
Yep.
Pretty good growth.
Good growth.
So let's straight away identify, if I don't get in the market in 2019, I would have missed out on $259,000 of capital growth.
Yeah.
Yeah. Most important thing is to get into the market when you can.
Yep.
Let's go through the numbers quickly. So in 2024, would require an $85,000 deposit, lending mortgage insurance would be $80,000 thereabouts, rounding numbers. So you'd need about $100,000, a bit more, to get into the market in 2024. That's using lenders insurance, as opposed to saving a 20% deposit, which has gone up to $171,000 thereabouts.
Yep.
So in 2019, based on the growth, so if we think about the capital growth, and this is just the average capital city median house prices, our clients have got much higher growth than this.
Yes.
So our clients are averaging around $120,000 a year capital growth on the properties we select for them. But if in 2019 I had made the decision, I'm not going to take the LMI and I'm going to try and save my way from $74,000 to $119,000, unless I'm a fucking brain surgeon, I'm not going to earn the amount of cash that's going to get me there in 12 months' time, to get me into the market before the 259,000 capital growth hit.
You're running a losing race.
You're running a losing race. You are in a race, a Melbourne Cup, and you're running a donkey. There's no chance you're going to get there.
No.
So lenders and mortgage insurance in today's market, in the last 5 years, is the best friend an investor will ever have.
So can I ask this maybe it's a stupid way to look at it, and it took me a while to get to this. 2019, had my 10% deposit of 59,000. I paid LMI of 15, could have kept saving. I paid 15,000. So that in 5 years, investment, in 5 years I could make 259,000.
That's a really good way of looking at it. That's exactly, I knew you'd get to there. All right. So if you asked anyone, would you pay $15,000 to make
In 5 years.
in 5 years? It's a fucking no-brainer.
Yeah.
This is like absolute, you'll never ever get money so easy.
So it's a mindset, isn't it? Some people look at it and go, oh, that's an expense, I can't get it back, and that's for the benefit of the bank. Yes, it is, but it lets you get in the market. You can't catch the market that's growing.
Correct. The bank don't take risks. They want a mortgage insurance against you to ensure that they can make the difference up. And the reason they take it, the reason they do 80% LVR, and that's their credit license limit that they put internally with their credit department, is because if the difference between a bank panel valuation and the fair market valuation, the property might be worth $596,000. They only want to lend 80% on it because their determination is, if I have to get rid of that property, what can I sell it for Monday?
That's right.
9 o'clock.
Banks don't lose.
Yeah, correct.
Banks win.
Correct. So they take a mortgage insurance out,
Yep.
but they make you pay for it.
Yep.
Which is fair enough.
Yep.
You want their money? Suck it up.
So somebody listening today, driving in the car, sitting in the train, sitting at home, listening to this thinking, you know what, I've got a deposit here. Maybe not quite what I thought I needed. LMI, do I do MI? Do I not do LMI? Like, is that the view? Look at LMI as an investment and look at LMI about the return you make on your 15 grand, not I'm pissing 15 grand away.
Correct. So people with only a 5% deposit plus LMI costs plus normal legal costs and those sort of things can now get into the property market. Contact our guys. We run through with our team, run through their finance, get a borrowing capacity and give them an exact dollar figure on what they can achieve. What's the email address?
hello@opencorp.com.au.
All right. Quick encore. We've had 2 questions come in. I'm happy to nail these off. First of all, I'll ask you this: is lender's mortgage insurance tax deductible?
Yes, it is. On an investment property, yeah. Yes, it is.
Yes. And can it be added to the loan?
I believe it can. Certain circumstances, you'd look at amortizing it over the length of your loan.
Yeah, perfect. So the action here for anyone is contact hello@opencorp.com.au. We can put you in touch with our mortgage brokers who can work out your personal situation, your borrowing capacity, work out what's possible for you. Today, I want to thank you, Al, for being part of Brick to the Future and putting your good looks across the camera, losing it, camera. More importantly, brains between head, and appreciate your the journey over the last 30 years.
Thanks, Cam. Been good to be here with you. And for anyone out there, any questions, send them in. We'll address them in future podcasts. hello@opencorp.com.au. Good to be here.